Hey everyone, welcome back to my channel. Don't forget to click subscribe if you want more weekly updates on investment strategies. It is difficult to definitively determine the best short trades in history as performance can be subjective and influenced by various factors such as market conditions and timing. These are just a few examples, and it's important to note that short selling can be a high-risk strategy and should only be undertaken with a thorough understanding of the market and the underlying security being traded. It's important to note that there is no guarantee of success in the financial markets, and past performance is not indicative of future results. However, here are some notable short trades of all time. Jesse Livermore, the father of modern short selling. Profit on trade, around $100 million. Event, 1929 stock market crash. He was probably one of the first examples of a successful short seller. Way back at the start of the last century, he shorted stocks just prior to the San Francisco earthquake. For this trade, he managed to make $3 million, obviously gaining a taste for this type of trade. He then went on to short the market crash in 1907. This made him richer, to the tune of $100 million. The year 1929 is what he was most famous for. The stock market crash happened just as he shorted the entire market. It's a great example of an intelligent, informed level of short trading. The day of the 1929 market crash made him $100 million. Ray Dalio's investments in government bonds in the early 1980s. Ray Dalio and his fund made substantial profits by investing in government bonds during a period of high inflation. Profit, around $100 million. Andrew Hall, the god of oil. Profit made, around $100 million. Event, going long on oil. Andrew Hall is perhaps best described as an investor who played the long game. The price of oil has historically gone up and down over the decades, and Hall recognized this, so he made plans to capitalize on this understanding. Citigroup used to have an energy trading section called Fibro. Hall worked for these people, and he was particularly interested in the price of oil. In 2003, the price of oil was low, at $30 per barrel. Hall traded very long on oil, betting on oil increasing in value to the tune of $100 within 5 years. It turned out that he had correctly predicted the level of growth. Problems ensued. Hall made Citigroup millions, but Citigroup didn't pay Hall the full $100 million that they were supposed to. And then they got rid of Fibro. He's known as a god in oil trading circles. But the market is so volatile that Hall has recently gone on record to say that automated trading systems are ruining oil trading. And he knows what he's talking about. Paul Tudor Jones. Profit on trade, around $100 million. Event, predicted Black Monday. The next logical step in short trading success is this man. In 1980, Jones founded the Tudor Investment Corporation. In 1987, he emulated Livermore's success and predicted Black Monday. No small feat. It earned him a huge financial reward, making him approximately $100 million. John Arnold. Profit on trade, around $125 million. Event, amaranth and gas prices. This is the perfect example of a trader who spent time looking carefully at the market conditions before shorting stocks that would be affected by those conditions. Arnold worked for an energy hedge fund, and he made some very good decisions around that market. A rival hedge fund named Amaranth LLC had predicted that natural gas prices would rise as winter set in back in 2006. Arnold correctly predicted that the winter would be mild, and Arnold had shorted natural gas. He made a lot of money, around $125 million, and Amaranth folded. In the aftermath of Black Monday of 1987, as all the investors fled to other currencies that had suffered less in the crash, Andy Krieger spotted that some were being significantly overvalued. One such was the New Zealand dollar, or as it's more commonly known, the Kiwi. Andy Krieger decided to make a move on the Kiwi and used options to short the New Zealand currency by hundreds of millions of dollars, with some reports suggesting the move was as large as $1 billion. Krieger's short was so big that it is claimed to have been larger than the money supply of New Zealand as a whole. In effect, Andy Krieger controlled more of the New Zealand dollar that was actually in circulation. Jim Chanos is a legendary short seller that predicted the fall of large companies such as MCI WorldCom. He would pore over SEC filings in search of anomalies, and in 1999, his firm examined Enron for the first time. Jim Chanos is a sleuth who enjoys poring over U.S. Securities and Exchange Commission filings to find discrepancies with certain companies. Known for selling stocks short, Chanos enjoyed pummeling companies, including Tyco, Boston Market, and MCI WorldCom, into the ground. One of his biggest bets was shorting Enron after he found problems associated with their accounting methods, among other things. So just after Enron's stock reached $90, Chanos began his short operation. Like many good traders, it turned out he was early. It took over a year before the stock plummeted, the firm finally declaring bankruptcy in December 2001. Warren Buffett's investment in Coca-Cola in the 1980s could have generated returns of over 100 times his original investment, which would be one of his most profitable trades. In the 1980s, Warren Buffett's company, Berkshire Hathaway, acquired a significant stake in Coca-Cola. The exact amount invested by Berkshire Hathaway in Coca-Cola during the 1980s is not publicly available. However, it is estimated that the company acquired around 7% of Coca-Cola's outstanding shares during this period, which would have been worth hundreds of millions of dollars at the time. It's important to note that Warren Buffett is known for his long-term investment approach, and his success is not just the result of a single trade, but rather a combination of many successful investments made over many years. As Soros battered the Bank of England, Druckenmiller sensed the opportunity to bet on the German mark, beginning by buying up British stocks, on the assumption that as the pound dropped and that exports would increase, he followed that by buying up German bonds, guessing correctly that other investors would follow during the fallout of the pound. The trade was a stunning success, earning an additional $1 billion. George Soros bet against the British pound in 1992. George Soros and his fund made over $1 billion by shorting the pound, which was being artificially held up by the Bank of England. Profit on trade, around $1 billion. Event, weakness of the British pound. The pound was backed up by the European exchange rate mechanism, and this meant it was protected on a global scale. This protection would never last, and Soros knew the artificial status of the pound was in jeopardy. The volatility of interest rates is needed for markets to thrive, and this wasn't happening. Soros shorted it. He happened to take a short position when the pound was doing very well on a fixed exchange rate, so it cost him a lot of money. He even had to borrow money to make the trades happen. The position rested entirely on the Bank of England experiencing a large and damaging event. It was a bold strategy. It worked. The British government withdrew from the mechanism, and Soros made millions out of it. In fact, Soros is estimated to have made $1 billion after the dust had settled. Kyle Bass began purchasing CDSs in 2007 as a bet against the multi-trillion-dollar subprime mortgage market, and in essence, against the entire global financial system. Bass managed to convince additional investors to come on board, and the result was a near $4 billion profit for his hedge fund. Following his big win in 2007 to 2008, Bass has enjoyed success with Hayman Capital, returning a total of 467% since its inception. John Paulson, the man who shorted the subprime market. Profit, around $4 billion. Event, subprime mortgage market. Paulson knew a thing or two about the housing market, and he shorted at just the right time. Well, to be specific, he didn't short the entire market, just the subprime part. He visited banks, including the Bank of America, and persuaded them to write credit default swaps against the subprime mortgages market. When that market went bust, he profited heavily through his subsequent stocks trade. The hedge fund he was part of made around $4 billion from the market crash. David Tepper. Imagine yourself back in 2009 and the global financial crisis had hit like a sledgehammer. The Dow Jones was on the floor, and some of the biggest banks like Lehman Brothers and Bear Stearns, ever present on Wall Street, had closed their doors for the final time. As money and trust continued to flow out of the banks and talk of nationalization reared its head, you would have to have been stupid to buy bank stocks, or so everyone but David Tepper thought. Profit on trade, around $7 billion. Event, 2009 financial crisis. Here we have a man who simply took a sensible look at the banking sector and made a call. In 2009, the financial crisis had engulfed most economies, and the USA in particular was beginning to feel the pinch. It was not a great time to be a bank. Governments tend to nationalize banks and other financial institutions when things get really tough, and the USA was poised to do this. So David Tepper did the opposite of what everyone thought he might do, and he bought a very large amounts of bank stocks. That year, the major US banks returned to top form, and their stock rocketed. This made David Tepper around $7 billion. The move was so gutsy, it has almost become folklore, with some people claiming Tepper keeps a pair of brass testicles on his desk, a reflection of the steel it took to enter that market at that time. Tepper was named as Institutional Hedge Fund Manager of the Year for 2009, as he earned $4 million personally from his bet on the banks. His success has continued and he was named Forbes' top hedge fund earner of 2012. Although by his own words his fund is consistently inconsistent, he regularly features in the top hedge fund managers year on year. Thanks for watching. Please don't forget to click subscribe if you want more weekly updates on investment strategies.